All right, folks, Vechain has big tokenomics updates, and I'm not really sure if I like them. Let's take a look at them and see what we mean here. So, basically, Vechain is well known as the trailblazer in the world of enterprise blockchain applications, blah, blah, blah. However, for those of you holding Vechain, they're going to align rewards with impact. Of course, the current token model, VETHO, is generated uniformly by VET at a rate of 0.00432 per day, regardless of contribution to the network. That's not good. Exchange wallets, for example, hold large portions of VET and generate a significant share of VETHO without utilizing it or distributing to users. So they don't really want exchanges to do that without actually distributing it or staking it or any way or like that. While this has enabled a highly liquid VETHO market, it has failed to properly incentivize behaviors that are conducive to growing and securing the blockchain. This is from their Medium page directly. To ensure economic sustainability, Vechain needs a tokenomic model that aligns VETHO issuance with meaningful contributions. So what's changing? So they're optimizing VETHO issuance. Overall reduction, total VETHO generation will be reduced and redistributed to reward active stakeholders. This new model better manages VETHO inflation and leads to a healthier supply dynamic over the long term. So there's going to be an issuance curve. VETHO issuance rate will become dynamic and a function of the quantity of VET staked in X and economic and validator nodes. So you will no longer be able to generate VETHO just by holding VET. You need nodes. Now, this does actually incentivize more active participation, but it also raises the barrier to actually generating VETHO. And this actually might result in something like Ethereum, where you need 16 or 32 Ethereum to actually stake Ethereum. And it might actually have people pool together their VETHO in certain services to actually VET in certain services to generate VETHO. So basically, the three people that can generate VETHO are validators, X nodes and economic nodes, and builders. Now, X nodes and economic nodes, you have to pay a large fee for them, and you have to hold a large amount of Vechain. So this will encourage holding Vechain. But for the small holders, it might encourage them to sell. So validators. The validators of Vechain are responsible for block production, securing network, validating transactions, and upgrading the protocol. Validators will earn rewards for successfully mining blocks, so you can be a validator. You can also buy a bunch of VETHO and be an X node and economic node holder, and those are critical to blockchain governance. X economic nodes are the backbone of governance and economic stability on Vechain Tor, earning VETHO for being active ecosystem participants. And of course, builders. Developers of projects. So developers of projects have actually a bigger incentive to actually be on Vechain. Developers will benefit from the new VETHO-based fund, providing benefits such as fee delegation, gas fee transactions to support app development, user growth, and more, probably dependent on the size of your app. So I'm not really sure how this is actually going to affect the overall tokenomics and if people are going to sell or they're going to combine their holdings into bigger stashes, which I think is what they're going to do. Because I think we're going to end up like a system like Ethereum, where a bunch of people will actually combine their stashes into really large stashes. And by doing that, they will actually be able to generate more than they were before, but there will obviously be a fee for these things. So VETHO will no longer be generated at the single VET level. Instead, it will be generated by the groups above, increasing based on total VET staked. This new model greatly increases incentives to participate and secure the network. They also have POA 3.0. So POA 3.0 is the third iteration of our groundbreaking consensus model with its naming convention playfully dubbed proof of adoption. Yeah, I hope they can get some adoption. Aligned with our broader goals, POA 3.0 delivers greater decentralization and new staking opportunities. You can do validator delegation. I think if you have if you're on the single VET token level, you can delegate. POA 3.0 introduced the viability for X economic nodes to delegate collateral to one of the 101 validator nodes. That's wrong. I was wrong. You have to be an X or economic node. So you have to hold at least 500,000 Vechain to actually delegate and get even more rewards. In doing so, X economic nodes can play an active role in block production, network decentralization, and Vechain Thor's economic security, earning additional incentives for doing so. Though this is kind of like a piece of Cardano. In POA 3.0, block producing validator nodes will no longer be capped at 25 million VET to enable greater overall VET staking. The validator selection process will no longer require KYC, introducing more decentralization and fairness. Validator positions will be open following a fair, public, and transparent process, full details of which will be shared in a future update. A new economic node tiers, POA 3.0, will introduce new tiers of economic node below the current minimum of 1 million VET tokens. So they will actually have lower tiers of economic nodes to get more people involved. So like no new nodes or X node tiers will be created. So essentially what's happening on the tokenomics is, yes, you don't have to hold quite like a million or million or 500,000 VET to get your economic node. There will be lower tiers, so it requires lesser VET, but you can't generate just via single VET, and you can actually earn even more if you have a node by delegating to a validator. So, and of course you get VET for being like a builder. So it inspires people to build on the chain, which is good, and it encourages people to hold a lot of VET, which is good. But it also like discourages people from holding small amounts of VET, which is bad. So I'm not really sure how this is going to play out. I think your regular retail investor might not like it, but they could probably pool together and make nodes with other people, which would allow them theoretically to earn more VET. So we're not sure how this is going to play out. Hope it works out right. Not sure if I like it or not, but it does seem like a little bit more organized at this point. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.